Good afternoon, and thank you for joining us today. I am Sarah Bumgardner. I am the Member Benefits Coordinator at AAFMAA, the American Armed Forces Mutual Aid Association. And today we are going to be talking about life insurance versus SBP. This is a really hot topic for anybody who's getting ready to retire. I'm so excited to be here today. I would love to know where everyone is joining me from today. So if you could please drop in a comment and let me know where in the world you are. I'm joining you from Nashville, Tennessee. I'm very close to Fort Campbell. I would just love to know where everybody is and where we're all joining in today. Also, what branch of service do we have represented today? Do we have anybody from the Marine Corps? I was a Marine spouse for 11 years, so I guess I'll be representing the USMC today. But if you are Army or Navy or Coast Guard, please just let me know where you're joining and what branch of service you're representing today. And so as we get started and we start going through this SBP versus life insurance, if you have any comments or questions, please drop that in the box. I'll be monitoring those throughout the show today, and I'll make sure to try and get your questions answered. I have an absolutely amazing host today to talk about this SBP versus life insurance. Oh, look, we have someone at DFW Army. All right, awesome. Well, welcome today. So let's jump right in here because this is such a hot topic for retirees. Our guest today is the president of AAFMAA, actually, Mike Meese. Mike is a retired Army Brigadier General who served 32 years in the Army before joining AAFMAA. So welcome, Mike. Hi.
Happy to be here, Sarah. Can you hear me okay?
I can hear you great. And I'm so happy. Before we begin, could you just tell us a little bit about yourself?
Sure. I was in the Army for 32 years, and then in 2013, did the transition that a lot of those that may be online are considering doing. I retired from the Army and had to make the decision about survivor benefit plan. At that point, I chose to do the survivor benefit plan. We can talk more about that later, but I also chose to join AAFMAA, American Armed Forces Mutual Aid Association, as the chief operating officer, and subsequently have now been promoted to be the president of AAFMAA. And what we're concentrate on is the financial independence and security of everybody in the military, and taking advantage of your military benefits, including the survivor benefit plan, is an important part of what we do and what we help our members doing.
Yeah, absolutely. It's so great. And you're right, that financial piece is just critical, especially when you're transitioning from the service. So that's why I'm beyond excited today to talk about this subject. It's so important. We're going to just kind of jump right in here. And for our audience that might not know, could you tell us a little bit about what is SBP, Survivor Benefit Plan?
Well, it's interesting to learn about the history of it. The military has always had a retirement program. It used to be that you had to serve 30 years in order to be retired, and then after World War II, they changed that to serving 20 years. And at that retirement, you would get the calculations are different, but basically 50% of your base pay for most people that are already retired was the retirement pay if you served 20 years. The problem was that when you died, that retirement pay actually stops, and it still does stop. And so in the 60s and 70s, you had a lot of military widows and widowers who were only living on Social Security, and they did not have anything from their military retirement. So the nation at the time decided to have military survivor benefit plan so that military survivors, widows or widowers, would have something in the event that they outlived their military spouse. And that's where they came up with the survivor benefit plan. It's a plan that is calculated by the Department of Defense actuary. Mm-hmm. And the way that they figure it out is, in order for you to participate in it, you pay 6.5% of your retired pay from the day that you retire until the day that you pass away. And if that happens and your spouse outlives you, then he or she will get 55% of your retired pay. So they figure it's half of your expenses. You get a little bit more than that, 55%. for the rest of her life in the event of a wife. And so that allowed military spouses to make sure that they would be secure even after the military member passed away.
Wow, that's fascinating, and that's so great that something was placed in, put into place to protect the surviving spouse, because those in the military, right, they're taking on a lot more risk with their lives. So this is such a great benefit. It does sound like SBP calculations could get a little bit complicated. So could you kind of explain what we would walk through with a typical retiree, what that would look like?
Yeah, I put together the figures for a lieutenant colonel with 25 years. Now, so that lieutenant colonel, if you look up the pay tables, after 25 years of service, would get a retirement pay, a check each month from DFAS of $6,490 per month. Think of that as the big circle there. If that lieutenant colonel wanted to participate in the survivor benefit plan, it would cost him or her 6.5% of that 6490 in order to be able to be part of SBP. So in practical senses, that would be he would be giving up $422 for his spouse to receive $3,570 for the rest of her life. And so that's kind of the trade-off that everybody has to practically look at. And when you're thinking about it, boy, do I want to pay $422 a month? I could buy a car and have a car payment for $422 a month for the rest of my life. And that would be a lot nicer than taking care of my spouse after I die. And again, that's the careful trade-off that people have to do when they're considering whether to do the survivor benefit plan.
Yeah. And, that's kind of brings up a great point, is that SBP, it's a big decision, right? We should educate ourselves. That's what we're doing here today, is and as we go on, we're going to get more in depth into kind of what does that $422 mean, and what are some other options. But also it's an emotional decision, right? You're leaving the service, you're transitioning to almost a new life, a second career, and there's this big kind of emotional decision there. So what about a deadline to opt into SBP? If somebody's not sure, or, what does that look like?
Yeah, that's the other really important part and kind of scary part of SBP, is you really only make that decision once, and you have to make it before you retire. So when you opt into survivor benefit plan or opt out of it, that's a permanent decision that you can't go back and change, except under very specific circumstances that I'll talk about. If you elect not to choose full SBP, then your spouse actually has to go in with you to the finance office and sign a form. I jokingly, when I talk to classes about people, jokingly refer to that as the form that says my husband doesn't love me anymore kind of form, but it really just says that the spouse acknowledges that they're not choosing the full survivor benefit plan.
Yeah.
Now, the exceptions of when you could change SBP, you could, if you signed up for it upon retirement and decided, hey, I really don't want to do this, you can, between 24 and 36 months, you can opt out of it, but you lose all the money that you paid into it. So you certainly wouldn't want to do that. Also, if your circumstances change, let's say when you retired, you were single, and then you got married, you could opt into SBP after you got married. And those are some of the very few circumstances where it changes. But in a sense, it's a kind of permanent and irrevocable decision once you make it.
Yeah, it sounds like it. So you really need to get a handle on it and see if you're going to sign that form or not, right?
Exactly.
So this is it's a really great benefit that's been provided to the military for retirees. And as you just talked about, SVP, it's such a big decision. It has to be decided between the service member and the spouse, just like you said, so much so that she actually has to sign off on that decision. How much do you love me, right? So can we talk just a little bit more about the pros and cons of SVP in a kind of bigger sense of what does that mean?
Yeah, the real advantage of SBP, every year, the retirement pay goes up. And so consequently, 55% of that retirement pay goes up as well. The other aspect of it is the government subsidizes the survivor benefit plan payment. The other part is, especially for higher income people, it's paid for with pre-tax dollars. In other words, that money that you pay for the SBP, in this lieutenant colonel's case, the $422, comes off of his or her taxes before they pay it. So it's kind of like the government is also subsidizing that part of it. And obviously, there's no evidence of insurability. If you're over 70 and you paid it for 30 years, you don't have to pay anymore. And if your spouse is substantially younger or substantially healthier than you, there's no penalty for that. The big disadvantage, though, is there in the red center column. If my spouse passes away before I do, where does all that money go?
Yeah.
Frankly, that's money goes to pay for other people's spouses. So that's kind of where the government subsidy comes in. And if they pass away first, the money doesn't go anywhere else. Now, it is important to know that if your spouse were to die before you did, in my case, I've been married now coming up on 40 years. My wife is very healthy, which is great. But if she were to die, my SBP payments would be suspended until, so I don't have to pay that anymore because she passed away. Obviously, if I remarried, I could reinitiate the SBP, and then any spouse that I would remarry would then be covered by exactly the same benefits that I had for my first spouse. And so that's an important consideration. And the biggest reason why people don't do it is, gee, if my spouse dies before I do, I've wasted this $422 every month that I've paid.
Yeah, I know. And I can absolutely see kind of that thought process there, right? In making that decision. But what about, is the spouse the only person who is eligible for SBP, or are there others who could be eligible to receive SBP?
Yeah, in almost all cases, in most cases, we're thinking about the spouse because he or she is the one that is dependent upon that military service member's retirement pay. If your children are still eligible to get an ID card, which means they're either under 18 or they're under 23 and are still in college, you can include the children. And for example, in this lieutenant colonel's case, if he had two children and was paying $422, it would only cost another dollar or two to cover the children. That would be the circumstance if both he and his wife or husband were in a car accident and were both killed instantly. The children would end up getting the annuity divided, if it was two children, half to each child until they were out of college or turned 23. And then that annuity would stop. In some cases, people don't cover the spouse, but cover the children, especially if you were divorced or something like that and wanted to make sure your children were taken care of. And some people are in divorce decrees. It's common that we see that a divorce decree would say that you have to pay so much alimony, and then once you retire from the military, you have to cover your spouse in survivor benefit plan. The way that DoD has set this up, there's only one SBP per customer. So you can either cover if your divorce decree says your former spouse is covered, then your current spouse can't be covered by SBP until or unless your former spouse passes away. Okay. So the one part that I do want to highlight, where is the only time that I absolutely insist that people get SBP, is if you have a special needs child. Many people don't realize this, but special needs children are actually your dependent. And because they may be dependents even after they turn 18, the Department of Defense will cover them with TRICARE in most cases and all the other benefits that they have while you're a child, because frankly, they're still dependent upon you. The Department of Defense considers them, once they turn 18, incapacitated adults. They have to be recertified every 4 years, and there's paperwork involved in doing that. But importantly, the survivor benefit plan will cover them And the survivor benefit, if you chose spouse and children, can go to a specially designed special needs trust that will wrap around and take care of that individual even after you pass away and your spouse passes away. It will provide funds into a special needs trust to be able to take care of a child that at that point would be an incapacitated adult and help take care of them for the rest of their lives. It's important to talk to a attorney, either legal assistance or somebody else, to be able to make sure that you have a properly designed special needs trust. But I've not found a circumstance with somebody with a special needs child where taking SBP for children or spouse and children would not be a very, very good consideration.
Wow, that's great. I'm so glad that you kind of really highlighted that and brought to attention about the special needs children, because like you said, you're going to be able to protect that child if done right, sitting down with an attorney, making sure a special needs trust is set up correctly so that those funds can continue to take care of that child after not only you pass away as a service member, but also as the spouse who's probably now taking care of the child by themselves passes away, that there's still a stream of income for that child. So that's so great to really make a note of that and make sure that that's taken care of. So kind of moving on and thinking about another thing, as military retirees are going through the retirement process, they're looking at getting a VA disability rating. A lot of times, at least they should be. So how does that factor in to the decision to either enroll in SBP or in life insurance coverage?
Yeah, a good point. Again, depending upon what your circumstances are, you can always enroll in SBP. You have to do that prior to retirement. You won't find out the results of a VA disability determination until after you retire. And so consequently, that may, depending upon what kind of disabilities you have, provide some additional income that trades off with military retired pay. Again, if it's a VA disability of less than 50%, then you'll get your VA disability, but that will be offset from a reduction in your military retired pay. Now, there used to be a circumstance where if you got DIC, if you died of a service-connected condition, the SBP would be reduced by that amount. And that was affectionately known as the widow's tax. Fortunately, Congress about 3 years ago adjusted it so that there is no more widow's tax, or they're phasing it out so that by 2023, there's no real interaction with the VA disability. And so the short answer is, if you're going to get a VA disability, that will somewhat affect your income, but not necessarily, it shouldn't make much of a difference on your survivor benefit plan decisions or considerations. Of course, when you die, that VA disability will stop. And so in that sense, it may be a slightly greater reason to have survivor benefit plan so that your widow or widower still has some income after you pass away.
Yeah, that's a really great point to make also about how the DIC and the SBP now has been phased out, so the surviving spouse can get both in its entirety in the year 2023. So we had a quick question here, Mike, from Michael, and he wanted to just kind of recap and understand better. So can you cancel SBP after 2 years or after the first year? What's that kind of, I got SBP, but I'm having some buyer's remorse.
Yeah, Michael, good question. If you sign up for SBP and let's say you retired on the 1st of June, after 24 months of paying into it, you can, between the 24th month and the 36th month, you can contact DFAS and cancel your payments. So you've got to pay into it for at least 24 months. But if you found out that you got a great job as a programmer at Google and have more money than you know what to do with, and you want that $422 back a month or whatever it is, or whatever, for whatever reason you wanted to do that, you could contact DFAS and then stop paying the SBP between your 24 month after you retire and your 36 months after you retire. The funds that you've already paid in, though, go into the DoD actuary, and they use that to fund other people. So it's not many circumstances where people end up canceling it after 24 months.
Okay, great. Thank you so much for kind of giving us just a little bit more about that timeline, because I find, with government benefits, timing can be everything. It can be crucial. So understanding that's really important. What about a service member who wants to opt in and say, I think maybe I want SBP, but I also want life insurance? Kind of walk us through what that might look like.
A good consideration. Again, for example, in that circumstance where that lieutenant colonel is there, he may say, "Hey, I really feel bad because my wife may die before I do, and then where's this money going? If I spent that same money on life insurance, I could pass that on to my children, and at least that money would go somewhere." And that is a very, very viable option. The difference, though, between, and again, AAFMAA provides life insurance. So if you want to get the best possible life insurance, you should call us up and we'll give you a quote. And I'll show you in a couple of minutes what some of those quotes might be of what you might want to compare. But in general, when you're thinking about life insurance versus SBP, life insurance, if you buy a $400,000 life insurance policy, that's going to remain at $400,000 20 years from now or 30 years from now. Your retired pay goes up consequently, and the SBP payment goes up. So it is in fact COLA and inflation adjusted, where life insurance would not necessarily be COLA adjusted. Also, as I mentioned, SBP payments are paid pre-tax and life insurance would be paid after tax. But again, that is a very viable option, especially if you want to make sure that your spouse and then potentially dependent children are also covered with a life insurance policy. And so a lot of people do opt into some form of life insurance to cover their needs.
Yeah, that's a great point. And so we're gonna, in a great segue, right into kind of the SBP versus life insurance. So, how do we calculate kind of the ongoing financial needs of those families? And I know when I think about further down the road and I think about long term, I'm thinking about things like RMDs, required minimum distributions. I'm thinking about Social Security. I'm thinking about my kids right now. So it's like there's a lot to take into consideration. And as we've talked about, this is a decision that has to be made, right? We've got to make it at retirement. So how does this play into the SBP versus life insurance discussion, kind of looking at that table of quotes and information?
Well, the real question that you need to think about is, what are the needs for your family if you were to pass away? I mean, that's the fundamental question. And let me give you a variety of scenarios. In one case, if both spouses are working and both have great jobs, or both were joint military and both have retirement pay, you may decide that, hey, in those families that I've talked to, if the one spouse passes away, the other spouse is going to have their own retired pay. We've got savings, we've got other income and those kinds of things. It will be obviously emotionally devastating, but financially it will not be that devastating. And so maybe we don't need life insurance or SBP. On the other hand, if you've got a spouse that has worked in the home, taking care of children or doing other things where there's not an income coming in, they may be very much dependent upon that, especially if there's not savings. When people leave the military, they're getting that retired pay. In the lieutenant colonel's case, you're getting about the $6,000 per month. Plus, they're probably working in a second job, and they have kind of their prime earning years. And we assume that this lieutenant colonel was, let's say, 45 years old. He or she has 20 good years to be able to make a fair amount of money, put that into 401ks, put that into investments, and then they have, and it would really be financially devastating if the person died between 45 and 65. Now, the probability of them dying during that time frame is not very high, but the financial impact on the family would be very large. And so consequently, some people may find that, hey, I'm fine if I live all the way to my 70s, but if I die during these prime earning years from 45 to 65 or 45 to 75, I've got to have some coverage there. Other people may say, hey, look, I just want to buy a whole life insurance policy to be able to cover myself going forward. So this is kind of laid out on this diagram. The top blue line is if you picked SBP, that would be the case where you want to be absolutely certain that a spouse, if you died first, was able to make sure that she would have enough money going forward. And in this case, it's $422 a month, but she's guaranteed to have the $3570, and that $3570 would grow by cost of living allowance going forward. On the other hand, if you chose the middle category, the one colored in red or maroon, this is where you would only pay $165 per month, and you'd have an $800,000 benefit that would be paid to the spouse in the event that you died sometime between age 45 and age 75. Now, if you lived to age 76, you spent that $165 in there and you protected your family for those 30 years. But you in a sense, you've won and you've lost. You've won because you've lived till age 76, but the cost of that life insurance, you will have paid that premium in. And what it's done is it's provided your family protection for those 30 years where you've been earning money, putting it into a 401k, building that retirement up so that you and your spouse can live after age 75. The third option is the bottom line there, which is where you said, okay, if I was going to put money into SBP, I might as well put that money into a whole life plan.
Mm-hmm.
There you'd put $422, that same amount in, and assuming that and again, the whole life plan would have to be underwritten. But if you're in standard health, and most people are, you could get a $329,000 death benefit. That would be true if you died at age 46. It would also be true for your spouse or your children if you died at age 96. They would get $329,000. Now, the aspect of that, if the spouse took $3,570 each month from that death benefit, that death benefit would last for 8 years. Mm-hmm. Well, if you make it to age 96, that 8 years is fine. On the other hand, if you die at age 46, that 8 years would the money would expire before your spouse did. Right. So the real question is, it is a complex decision. Mm-hmm. This gives you kind of three typical options. And so the two questions that you want to ask yourself is, what would be the financial impact if I passed away at various stages? And that will help answer that question. The other slight part of question is just looking actuarially at the probabilities. I frequently talked about a male spouse and a female wife who would benefit from it, or a male service member and a female spouse, because those are the circumstances where it makes the most amount of sense to take SBP from purely a probabilistic or actuarial time frame. In my case, my wife and I, our birthdays are within 2 months of each other, and women tend to live about 2 years longer than men do, and she's at least as healthy as I am. And so consequently, just from a probabilistic perspective, it is likely that she is going to outlive me, and it is likely that she will then benefit from the survivor benefit plan, because when you just run the numbers, she probably will. Mm-hmm. And so that's why we tend to see that it is slightly more advantageous for male service members to take SVP than female service members who are married to a male spouse, because in most of those cases, just again, from an actuarial perspective, it's more likely that the male husband is going to die first before the female does. And so that's some of the trade-offs that you've got to make. This gives you three examples, but it can be a lot more complicated than that when you take a look at it.
Yeah, that's great. And I love these how you've laid out kind of these three different examples. And it's as we've talked about, it's such a big decision. There's so many things that go into this. There's the emotional, there's timeline, there's just, as you said, factually, who's going to live longer, right? And then the decision it's a personal decision. There's not one decision for everybody. Everybody's ongoing financial needs are different. We're all different in that respect. So, Mike, if somebody is on the fence and they are, they don't know SBP versus life insurance, what would you advise them to do?
Well, the best thing that you can do is get good professional advice, and we're happy to do that at AAFMAA. You can reach out to us at AAFMAA.com or call the 800 number when you go to AAFMAA.com. Any of our member benefits advisors will be happy to go through exactly that calculation for you. We use the one example of a lieutenant colonel with that's 45 years old that has 25 years of service, but I just ran this for a general officer who had 30 years of service, 25 years in the National Guard, did those calculations for him and his spouse, put in her birthday, his birthday, calculated, and could tell them based upon actuarial information that, hey, look, the probability of you dying before your spouse is 67%. The probability of her taking this money for more than 10 years, which would be quite a bit of money, is about 35%. And that way, and the cost of getting an insurance policy from us is X amount. The cost of getting a term policy of the last 20 years is a certain amount. The cost of a whole life policy that'll last for the rest of your life is another amount. And that way you are fully informed with the facts. You can make the decision that is best for you and your family, both in the short term to avoid that cost, or pay that cost to be able to have that additional peace of mind, as well as the long term to make sure that your family is well taken care of.
Yeah. And you just said it so perfectly. It's peace of mind, right? That's what all this is about, is being able to sleep well at night, to know you have peace of mind, that you are making sure that your loved ones are taken care of should something happen to you. So I just want to thank you again, Mike, for joining us today. You've been so informative. I'd like to thank everybody out there who joined in the audience today. Hopefully you were able to have a takeaway from this. And I really look forward to our next opportunity to serve everybody out there and to provide some more information. And like Mike said, if you have questions on this, please feel free to reach out to us here at AAFMAA. That's what we're here to do, AAFMAA.com, or give us a call. So hopefully we'll be hearing from you. And thank you again, Mike, and I hope you have a great day.
Thanks very much, Sarah, and thank you for hosting this. And I wish everybody to enjoy Memorial Day weekend this weekend, as we reemphasize thinking of all those who have served our military, which is what we try to take care of every day.
Absolutely. That's so well said. Thanks again. Bye, everyone.